And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out.
Whoa. It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Hi, I'm Phil Grande. Well, today I got to tell you, I've been in this business, 40 years or more? I never heard anything so stupid as I heard today from Wall Street. Oh, guess what we're going to do? All the stocks that were losers yesterday, they're all going to be winners today. And you got all the tourists jumping into the stocks that were losers yesterday, thinking they're going to be winners today. It's not going to work. I never heard anything so stupid. Remember, the stock market is driven by price and yields. You follow price. Price is trend. When you have a trend in a stock going up, you got a nice trend. Sometimes we call them power trends. And yes, sometimes you get pullbacks, 2%, 3%. But as long as that trend keeps going up, price is everything. Price is your trend. It locks it in. It gives you profits, steadiness. And then yields. You want to watch yields because yields tell you where is the money going to go next. Is it going to go into small, mid-cap stocks? Is it going to go into tech? So you got price will tell you the trend is going up, and again, the yields will tell you where is the money rotating to. So we hit 4.4 on Monday. Remember that? We woke up and everybody was going crazy. 4.4. That was the yield. And the reason for that was because there's a lot of liquidity in the system, and everybody wanted to buy T-bills, short-term T-bills for around 3.6%. These were the T-bills that in 2022, 2023, you get 5%. Well, today you're getting 3.6%. So when people woke up in the morning, as I said yesterday, it's like, wait, if you ever owned a boat, you woke up early in the morning, put your feet on the floor, and all of a sudden the water's up to your ankles. Well, that's what happened Monday. But we didn't have water up to our ankles. We had dollars up to our ankles. Why? Because the government would not sell us short-term T-bills because it's dangerous. Because the more short-term T-bills, those T-bills come due. They got to roll them over quickly. Roll them over. Sometimes those T-bills go up, 5, 6, 7%. And the government doesn't want to get caught. That's dangerous. Where you're owing 5%, 6%, 7%. So that was Monday. So what they did was they put all that money into 10-year treasuries. So that's how they took all that money out of the system and they put it into 10-year treasury yields. So there was no short-term T-bills. Now, again, this morning, the 10-year was down to 4.34 after hitting 4.5 on May 4th. So yield drop, that's a lot. That's a big drop. So, and why the drop? Well, because another announcement comes out of the White House. Oh, everything's fine. We got a deal with Iran. They're going to sign an agreement with us. Nice fellas, if we can find them. We don't know where they are, but they'll sign off. Don't worry. In the meantime, these guys are over in Dubai in their multi-million-dollar condos with their private jets. They don't live over in Iraq. Are you kidding me? With no electricity, no air conditioning. And these are the guys. Remember, who they're really dealing with is the guard, Khomeini. When he first started, he took over Iran. Remember, he put this army together, the Guard they call it, and it's his personal army. It's like the SS was for Hitler. So That's who you got to deal with. And unfortunately, the truth is not being told. That the people that they are dealing with, the White House, have no authority. Because there's 5 generals, very wealthy, millionaires, and mostly billionaires, who live in Dubai. And they have their own little, they split the army up, and they're making a fortune on oil. They're not just going to give up. Why would they? But every time that we get news, Iran tensions ease. This is what happened this morning. When we woke up and we saw it said oil was, the Treasury yield was down to 4.3 because they said the Project Freedom was paused. We won the war. Iran tensions has eased. We finally found the guys who are going to sign the back of the piece of paper. Oh, the Islamic Revolutionary Guard. They're not going to do anything. They're happy now. Oh, the Strait of Hormuz, no problem there either. Normalized now. We got that covered. So that is what's driving the pullback, and you're going to lose a bunch of money if you listen to these dopes on Wall Street, these people on CNBC and Fox Business and the rest of them tell you to buy because all those losers, yes, you're going to be big winners today. That's not how the market works. It doesn't work like that. You've got to watch trend. You got to watch price, which is trend, and you got to watch the yield, because that will tell you where the money's going. So those announcements is what got everything started today. So people were in there buying like crazy, okay, thinking, oh, everything's just ducky, and they're buying, tech stocks like crazy. Make sure when you're buying tech stocks, you're staying with the leaders, and you're buying at the right time. And I'll share, let me give you an example of some of the stocks we own. You've got to be very, very careful with this stuff. Every time there's an announcement, you can't deal on emotion. So let's take, these are the chips, so MU. Now that's MU, right, okay, MU. So MU, and if you go back to May 1, look, this thing has been nothing but just going straight up, right? Just going straight up. So what we're looking at is trend. Price, okay, gives us trend. Now, and again, everybody's jumping back into tech because yields are back down. Right now it's 10-year Treasury 4.35. So everybody's jumping back into these tech stocks. Now, there's nothing wrong with that if you know what you're doing. Think of it this way here. You got to think about if you ever lived, I think I talked about this yesterday, if you lived in a house that has an oil tank in the cellar, okay, and it has a gauge on it, and when you go down and you check the gauge, and if it's dropping, you don't celebrate. Well, that's what they're doing because yields went down. They're celebrating. You don't celebrate. It's like if you have an oil tank in your cellar and all of a sudden you see the oil's going down, you don't celebrate. You get worried. You call the oil people. Tell them, hey, my gauge is telling me I got a little less than I thought we had. Can you come out on Monday and fill it up? Only Wall Street will tell you when the gauge was coming down, the yield's coming down, they're celebrating. And everybody's jumping in these high yield stocks. And so, this could be a real... it could be a real bomb, because if you're jumping into those stocks today, most of these stocks are going up because of short covering. So you got to make sure if you're jumping into these tech stocks, you understand they're going up because of short covering, and you got to wait until you get a good trend. You get a good trend, good price. You need good price and you need good trend. So as long as you get good price, good yields, and wait for a pattern to form, don't get emotional, you can get in. But you don't jump in on a day like today because these people on Wall Street are telling you, oh, get into XLB, get into XLK, get into the industrials, get into the utilities, everything's wonderful. No, it's not. So you got to be very, very careful And when this news comes out all the time from the White House, how everything's wonderful, and these stocks start going back up, they can turn around and whack you. So you got to know how to watch the trend. As long as you're watching trend, and as long as you're watching price and yields, and use that yield as a gauge, like that oil tank. And every time when yields come down, you don't celebrate. It's like with the oil gauge. When your oil gauge comes down, you don't celebrate, you get worried, because that means that there's less oil. It could be 1 o'clock in the morning, you could be freezing to death, right? You don't celebrate. It's the same thing. You don't celebrate when yields come down. Okay? What you do is try to identify an opportunity to buy or sell short at the right time, using, again, price and yields. So that's where we are right now. Now, as I said, so people are, again, they're going to get caught up and they're going to get hurt, okay? Because this people don't understand what's going on. Stocks are at an all-time high, for God's sakes, and they're just jumping in. Everyone's cheering. The NASDAQ, it's exploding, up 23% in 30 days. That's $6.2 trillion. What are you, nuts? And people are chasing it today because yields are down. They were losers yesterday, but now they're winners today because yields are down and people are jumping in. What are you, nuts? The bond market is screaming danger. Again, think of that gauge on the oil tank. Your oil tank's gauge is going down. You got less oil than you thought, and there's a big snowstorm coming, and freeze warnings, and oil tank's going down. It's the same thing with yields. When yields go down, it's a warning. It's not a celebration. It's not you just jumping and buy everything today. And you wonder why people, 73% to 95% of people in the market lose money. The bond market's screaming danger. My God. Long-term yields are over 5%. That makes everything so expensive. Mortgages, credit cards, auto loans, corporate debt, government debt. Government debt's insane. But they're celebrating. They're celebrating today. Oh yeah, buy today, because yesterday's losers are today's winners. Just jump in. The government's already drowning in debt, $39 trillion in debt. We're paying over $1 trillion a year in interest. What are you, nuts? This is crazy. More is spent on interest than on our military. And that's bullish? Buy. Japan and Europe are flashing the same warnings. Japan's yield, the highest since 1997. UK, highest in 28 years. Germany, near 2008 crisis level. But buy, because yesterday's losers are today's winners. And people are jumping in. Oil. Are you kidding? We went from $70 to $110. Oh, wait a minute. The Strait of Hormuz, I thought they told us last night, everything's fine now. Everything's fine. What's oil trading at today now? What's it at this afternoon? Will you find out for me, please? So, we can get back to $110 so quickly. I mean, it's just so dangerous. Now, if you know what you're doing and you know how to trade, you know how to go long, you know how to go short, and you know how to read the market, and you understand, the messages from the market, you can make a ton of money. So, in 2007, think about this. Stocks looked great. Bonds said danger. Remember that? Bonds were right. Bonds are never wrong. The bond market is always right. It's the treasuries that tell you when it's going to crash. The treasuries, when they start heading towards 4.5, 4.6, 4.7, they're the first one that tells you you're going to get a crash or correction. They're never wrong. And then IWM confirms it. The small mid-cap stock will confirm it, because that will be the first one to roll over, turn red. Well, the S&P and the Qs are still green. So when you see the S&P and the Qs are green, and IWM is green, now sudden IWM rolls over, you better be short. Don't listen to these dopes on TV every morning. Bye, 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 bye. You got a tremendous amount of opportunity to make tremendous money in this market. You just got to know how to go short and long. Hedge funds. In 2007, the stocks looked great. Bonds said danger. They were right. Stocks crashed. Everybody said, oh, no, 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 bonds are wrong. Kramer, bonds are wrong, don't listen to it. Who's that other fool? Larry Kudlow. Larry Kudlow, what a moron. Everything's wonderful. How'd that turn out? So again, there's nothing wrong with the stock market. We got a lot of tools. You just got to know how to use them. That's all. We'll help you with them. You can't make money like this anywhere else. You just got to know how to use your tools and turn off the TV. Okay? All right. See you on the charts.